And so let me just say, look, we got 30 minutes and each one of you is deserving of the full 30 minutes. So it's a bit of a challenge to have such a great panel and so little time. But what I'm going to do, and we do really. So, if Tim joins us, he's one of the world's leading VCs. Bart Stephens is perhaps the world's leading blockchain VC. Kelly is the guy that is really driving global unicorn secondary market through Forge. And of course, Greg has already been introduced. But what I'd like to do is just go down the line first. Greg, I won't ask you to do this, but starting with Bart and then with Kelly, could you just do your own personal introduction?
Sure. Matthew, thank you for inviting me on your panel today. It's nice to do a virtual presentation. This is our collectively our new world, I guess. So my name is Bart Stephens. I'm one of the co-founders of Blockchain Capital. Our firm has been in existence for 7.5 years, which doesn't make us as old as the Draper network of VC firms, but it does make us one of the oldest and most tenured investors in the blockchain technology sector. I have a background prior to forming Blockchain Capital in hedge funds. So I ran a technology hedge fund for about 12 years before founding Blockchain Capital. And prior to that, I'd founded my career at E-Trade. And so our firm exists really for two reasons. One is to help partner with the leading entrepreneurs in the blockchain technology sector to help them kind of level up, to get to the next level, to use a video game analogy. And we do that with more than just capital. We want to provide business development support and recruiting. We help with corporate development and M&A. We have a regulatory practice that helps the crypto-focused companies not inadvertently run afoul with US regulators like the SEC. So we're primarily early stage investors at the seed and A round. And we like to bring more than just a check in our investments to our 80+ portfolio companies. Our second reason to exist at Blockchain Capital is really to be a one-stop shop for high net worth individuals, family offices, foundations, and institutional investors that want coverage of this exciting new industry, but they just don't know how to do it. And so our job is to sift through the 1,000+ companies a year or crypto projects that we review and be highly selective in terms of the types of companies and crypto projects that make it into our portfolio. And so that's probably a good enough introduction, and I'll hand the mic to the next speaker.
Fantastic. Thank you so much, Bart. And for full disclosure, we and the Kretsu Capital Blockchain Fund of Funds as well are investors with you, and we appreciate all you're doing for us. Thank you. So Kelly and I have known each other for 15 years, and Kelly is the guy that taught 3 of my boys to play football. So Kelly, you're up.
Thank you, Matthew. This is my first virtual conference panel, so excuse me if I breach etiquette a couple times here, but real quick, I'm the CEO of Forge. Forge has been around for about 6 years. Before this, I had run a number of venture-backed companies, primarily in the SaaS space. And then recently I was the CEO of a company called Pensco, which custodied private investments for people who wanted to use retirement money to invest in the private world. Forge is a interesting story. Briefly, we were and started out as a Draper investment in our sort of founder days as Equidate, primarily a platform to buy and sell secondary positions in private companies. Now, in the last 2 years, the business has been rebranded Forge. I joined, and today Forge is in 3 different businesses. We continue to be the leading institutional platform for buying secondaries. We're known around the world for check writers who want to write, $5 to $100 million checks and buy big blocks of the top 50 names. We predominantly are in the unicorn space, so about 300 companies represented on the platform. Most of the activity is in the top 100 names. But in addition to buying and selling, you can also custody with us. We have about 1 million investors now who hold accounts where we hold their asset and their cash that they intend investing in the asset class. And so we make money by transaction fees, by custody fees, by cash yield. And later on this year, we're going to roll out a very compelling offering around data and pricing. So we've got more pricing data on private companies than anybody in the world. So you'll be able to see anonymized basis if you're a subscriber, every purchase that's been made in the last 5 years in the biggest name unicorns, and use that data to help you make a decision and provide insight. So Forge is continuing to build. We're still trying to be a unicorn ourselves. And so we're out in the world raising money and investing and building technology. Fundamentally, the tech that we're building is either transactional tech. I know you guys saw a little bit of a demo there on Link 2. Think about our transactional tech as having a very broad audience. And so there's a lot of different workflows that go into that. We have a custody capability, and the data component of our tech will be sort of shown to the world later on this year. So
thanks,
thank you.
Kelly. Yeah, thanks, Kelly. That's fantastic. And Tim, we just had the Draper Network presentation, but if you could just spend a couple of minutes introducing yourself. Bart Stephens, Kelly Rodrigues, and Greg Kidd have already gone before you.
Terrific. Well, I'm Tim Draper. I've been now in the venture business for 35 years. We've got it in our blood. We've been doing it for years, and we love what it does for the world. And in times like this, with 26 million people unemployed, it's the startups, it's the small businesses that actually make the difference and get those people working again. So I love what we do, and we also kind of keep developing the world and building technology out, and that's been a wonderful it's been a wonderful career so far, and we're looking forward to really great things moving forward. The fund I operate on is called Draper Associates, and a good part of it is now my money. And we funded Forge and a number of other fintech startups because I saw this happening. I saw a big gap in the financial marketplace, and I didn't see exactly how it was going to be solved. I saw that the public companies were getting more and more regulations laid on them. So the ladder was being pulled up. So no companies were able to reach that ladder. They kept moving it up. And these private companies of ours were dying on the vine because they weren't able to get money. And I thought, it may be that we need a new way of doing this. And so I got very excited about the idea of a private company marketplace. And so I got very excited about Forge, which was Equity at the time. I also backed AngelList and Carta, and then I made a big bet on Bitcoin and a number of other cryptocurrencies, because I think that all of those things are going to fill the gaps created by sort of a bloated set of bureaucracies, whether it's the banks, the investment banks, the stock markets. This is the time. It is an extraordinary time, and the world's going through this sea change, tectonic change, whatever. And I think a time like this, when you have some black swan event, I think that we've got a kind of a interesting, when everybody's at home and they work on Zoom or whatever they do, they have an opportunity to start realizing that there is a better way to operate. So that's me. I'm kind of going way off the topic.
Good because
my introduction is otherwise I think people see enough of me, they don't have to hear my introduction.
No, well, you know what, Tim, it's good. I started off before you joined by saying it's crazy. We've only got 30 minutes for 4 of the world's leading investors. But that's the truth. We're 10 minutes in, we've got 20 to go. So I'm going to say, Tim, that you just answered the question, some of the opportunities you're seeing. And Greg gave us his answer about an hour ago. So let me ask the same question of Bart and Kelly. Bart, as an early stage, and as a leading blockchain venture investor, what are some of the opportunities that you're seeing surfacing right now?
So at a macro level, I think I won't cover what's going on with respect to COVID. That's been widely discussed in multiple forums. But for us, we are really intrigued with how well blockchain technology is performing amidst really acute market circumstances. And it's interesting to compare, say, the price of Bitcoin versus the S&P 500 year to date, which is still down roughly 10%. As of the beginning of this presentation, Bitcoin's now up 28%. Well, and how does that happen? How has the Bitcoin network continued to function with 0.0 downtime, no bailouts needed, no coordinated Fed intervention, no regulatory holdups? And that's because, if you double click on these blockchains, what makes them so special? Well, they are distributed, they are decentralized, and that makes them inherently resilient. And so for us, we think this is a fascinating moment of time that proves that these blockchains are battle-tested, hardened, and resilient. And I think this could be the future plumbing for a lot of the financial world. I know Tim has got his Bitcoin tie on right now, which I always love seeing. But to me, this is a real important crucible where Bitcoin being supported by the Bitcoin blockchain infrastructure is really shining at a moment in time where a lot of the traditional financial systems are fraying at the edges. And so we continue to be excited both about Bitcoin as a crypto asset and many others that we're an investor in, but also some of the companies like the Coinbases, the Krakens, or Anchorages of the world that are really, to use a civil engineering analogy, that are building the bridges and roads and tunnels of this new internet of value. The internet that we all use, like right now, allows for the exchange of data. Blockchains allow for the exchange of value. That's why we call it the internet of value. And so I think emerging out of this crisis, we're going to see a renewed interest on behalf of certainly retail investors. Bitcoin's up 15% today. But I think for the first time, we're going to see real institutional interest to take a look at how can we incorporate this incredibly resilient, pandemic-resistant technology into some of their core operations. And just a quick advertisement, we have a brand new presentation on the kind of impact of COVID on the crypto markets that we just published on our website. You can find that at blockchaincapital.com.
Thanks a lot, Bart. And I think and I should have said at the outset, there's about 140 investors and family offices listening right now. And so this is a great audience. Now, Kelly, you actually focus your energies a little bit later, I would say, than Bart and Tim and Greg. But tell us, what are some of the big opportunities you're seeing? And conversely, why don't you spend 3 minutes telling us what you're seeing in the mid and late stage?
Sure. I'd say that everybody's affected by COVID in some manner. The thing that we're seeing, I think, bears a little bit of context. We view ourselves not so much as a company that tells you which unicorn or which late stage company to invest in, but really the operating system of the private market. So we're around data and we're around reducing friction to get in and out of these. The thing that happened sometime around March 15th was something we hadn't seen since the founding of the company. We saw a dramatic imbalance between sellers and buyers. Since our business is about 70% institutional, what happened when the public market started to drop is institutional investors thought, well, maybe I can get a unicorn stock for 30% off if the broader market's 30% off. The truth of the matter is, if you're holding private stock in a unicorn and it's 30% off because the public market's off, you're probably not selling it. And so we saw an absolute complete halt of large institutional trades, but we saw a ton of employees, people who work at these companies, people who are getting laid off by these companies show up. And so the bid-ask ratio just skyrocketed on March 15th, and it still sits at about 30% of a sort of imbalance than we've seen in the last 6 years. Said another way, if you work for a company that is providing technology or services for stay-at-home work or play, then you're doing pretty good right now. So we have traded in the Instacarts and in the food delivery and stay-at-home sector at pretty much the price that was happening before everything went down, but just about everything else is off. It's not a 30% value world. It's probably in the private markets as we're seeing it, about a 10 to 15% value world. So I'd say if you're looking at just what we're seeing in the data, it would say that if you wanted to get into a private company, right now is a pretty good time. But don't expect a discount if you're going to buy a stay-at-home type of company.
Thanks a lot, Kelly. Well, you just said something that I want to ask Tim about. It's the second question that I'd thrown out to you guys. There are silver linings here, and some of the adoption curves on technology appear to be going through the roof. Virtual education, online entertainment, remote health, some of these things. Tim, what are you seeing as silver linings out of this? Obviously, this is a terrible time, terrible crisis, but for early stage investing, what are some of the silver linings?
Yeah, I mean, with our existing portfolios, we are seeing a divergence. We're seeing some companies where they've been pushing, and no one was listening. It was sort of all they got were early adopters, and I think a lot of crypto is in that category. And all of a sudden, everyone's woken up and they're saying, well, I'm here alone. I might as well try it. And so I'll go get a ledger and I'll download some Bitcoin and see what it's like to actually have Bitcoin and buy it and spend it and move it around. Same kind of thing is happening in VR, where these VR entrepreneurs were pushing, and there were only the early adopters. Well, now people are trapped in place and they're going, wow, this Oculus thing is pretty cool. Let me try some new stuff. And the same thing is happening in education. I think anybody who has young children are now with them all the time. And it's interesting, you go to Costco, the two things that they had just plenty of were toilet paper and children's workbooks. And it gave me this feeling like, whoa, those are the things people are really focused on, taking care of their kids and wiping their butts. But it's I think we've got a wide open period right now. This is one of those black swans that plays really well into the venture capital world, because we got 26 million people unemployed. All these AI scientists and machine learning scientists who are in the travel business are now unemployed. We can pull those people in and have them do whatever it is the next phase of travel or the next phase of whatever is. So I think it's one of those really interesting times. It's a very difficult time, and it's really going to be up to us to continue to fund companies, even though we're nervous about doing it, so that the economy and the jobs and all of that start coming back. But I think we're also going to, we're going to make a fortune, because the most of the venture guys are right now shoring up a bunch of their old companies. And I've been through these things 3 or 4 times, where there's a catalyst event, catalyst event, and we've had to deal with it and figure out exactly how to manage it. And I have found that entrepreneurs that are normally were coming to me with sort of Series A pricing are coming back and saying the same thing at seed pricing. Series B coming down to Series A. So while the stock markets are going crazy, the startup world is very tight.
So thanks, Tim. That was great. And in fact, I'm going to pick up on that point about valuations in the lightning round, because I think it's a good question to ask all of you. Now, I want to ask the next question to Greg, and because he wasn't here, didn't do an introduction, Bart, Kelly, Tim, meet Greg. Greg was first money in on Twitter, Square, Coinbase, Ripple, early investor Robinhood, and a bunch of others. So Greg, what I want you just to share, it's this question of, are there areas that represent true and enormous opportunity that we all need to be working on? And I don't mind, Greg, whether you want to just reiterate some of your thoughts about identity, or whether you want to talk about AO and his idea. But why don't you just spend 1 minute on what do you think are some things that are really opening up right now? And you need to come off mute, Greg. You're still on mute, Greg. You're still on mute, Greg. All right. So I see it too. Greg is on mute.
There we are.
Oops. Let's unmute Greg one more time. There you go. So
All
Greg,
right.
over to you.
Great. So there's a new presentation I'll be giving this year. And again, it's a little untimely right now. We have the COVID opportunity, and everybody's talking about that. Had COVID not intervened, I do believe right now there was a agreement by both Democrats and Republicans in this country that a number of the big tech companies had too much power. And we're going to look to do some things to clip the wings of a bunch of the technology players. You're seeing it still concerns with Amazon, concerns with Google, concerns with Facebook. It's not just in the US, it's in Europe. So one of the questions that's going to come out of this is there's been a lot of blockage of innovation because of the way that Facebook in particular has allowed others to use its data in the wake of the Cambridge Analytica scandal. Facebook is itself pivoting to move away from its sort of social network model to more instrumental forms of messaging. I do believe we're going to see a transformation from the way that companies built by selling data to basically ad-based schemes to more instrumental forms of how super apps are going to work. So Facebook is working hard to integrate WhatsApp with a wallet, Calibra, and new forms of groups with identity so that the people using Facebook are no longer fake identities. You have super apps coming out of China. I think we're beginning to look at an era where people are, instead of having all these fragmented apps on their phone, there's going to be a new generation of apps that are more like the WeChat world. And there'll be a lot of casualties, a few winners. And so that's an area I'm keeping a very close eye on. It also depends on what happens when the governments begin to pressure Google and Facebook to change their practices as to who has access to data. The fact that Visa bought Plaid to kind of get control over who has access to data in an open banking environment, all of these issues are on what I call the reg tech frontier. And so there's going to be a change to the rules of the game, and that's going to create a new set of winners and losers. So I do believe that there's an opportunity for the next, not just unicorns or 10 unicorns, but 100 unicorns will come out of folks that can figure out how to thrive in an environment. You may need to litigate to innovate, but I'm in that world. So some of my biggest bets right now involve litigating to open up access to data that has been controlled, whether it's controlled by Facebook, or just think about the reputational data that Uber has or Airbnb has. Who owns that data? Do users own their own data, or do companies own the data because you signed terms of use that turned it over? And so when users get control of their data, there'll be a whole new set of innovation that's going to happen. That's the area where I'm looking over the horizon.
Thanks a lot, Greg. So just going down the line, this is actually question 7, but we'll do quick answers. Bart, is there an area of technology that you want to call out right now? And you're also on mute.
I'll actually do a little riff on Greg's presentation and some of his comments. I think we are at an important inflection point where users and Americans are increasingly fed up with all of their personalized data being owned by large tech monopolies. And so whether you have to litigate to get there or there's users that finally have another choice, I think we're going to see a rise of some new web services that in our industry, in the blockchain and crypto industry, is known as Web3, where we're going to see web services that are decentralized and distributed, where the users control their own data and access to their data and perhaps participate in the upside. If I'm searching for Honda car and Google makes $1,000 on a referral for that, if I click through and buy, there's a strong argument to be made that the user should be cut in on that data. And so we're invested in a series of projects. Blockstack would be a one that are looking at reimagining web services to put users' own data back in their control and add some sophisticated permissioning. And all of these new web services are enabled by certain blockchains. And so we're spending a lot of our time there. And we're also looking at spending a lot of time at what we call open finance or decentralized finance, which is in some ways the same concept, but applied to financial services. Why should a bank own all of your data? Why should an insurance company charge you the same amount if you can prove that you're a better, safer driver? And so this mega theme of empowering individuals to take back control of their own data, I think it is an important one. We probably haven't quite hit that tipping point where people are willing to leave Instagram, but they really haven't had another choice yet. And some of these kind of new blockchain initiatives will offer consumers another choice if they want to exercise that capability.
Thank you. So I'm going to ask Kelly to lead off the next question, but this panel has gone so fast and you guys are also amazing. I did ask Bill and Adam if we could have extra time, but the next company is going to be ready at 1:30. So we've only got 3 minutes. And so here's the question, and Kelly, I want to start with you, but then go down the line. You know, we're also, Alice and I are spending time with Oaktree and Ares and Fortress and others. These are distressed debt guys. And they think in 3 to 6 months' time, we're going to have the largest ever wave of bankruptcies this country has seen, and it's going to be a distressed world. So the question, starting with you, Kelly, is if you had $1 million to invest, as many of the people who are listening in do, would you pause? Would you carry on investing, or would you be doubling down right now? What would be your strategy for how you invest your $1 million over the next few months, Kelly?
I think it's pretty tough to guess where the bottom of a market is. Most people would agree with that. I'd be doubling down right now just because I have a lot of faith in not only the companies that we serve in terms of the top 300 or 400 names. I think there's another 500 to 1,000 companies that are going to have a very difficult time in the next few months to year getting access to capital. And I think there's going to be a shift in where companies get late stage capital. So it doesn't surprise me that you're hearing from those types of names as not only going to serve the potential bankruptcy future, but just the overall capital needs of later stage and emerging later capitalized private companies. So I think that the big shift is going to be where people get their money from. And I think you're going to see a lot of venture guys, big name guys, Tim's already done it, refocusing back on earlier stage businesses.
Thanks a lot, Kelly. And Tim, would you be stepping into this moment? Would you pause and wait, for a few months? What would you be doing? Or what are you doing?
I'd sell everything, and I have. I'd sell everything in the public markets. I'd be buying private companies and startups because they're the ones who are going to lead us to the new world. And I'd be buying Bitcoin, and I would be selling real estate. I think I'd get out of the commercial real estate business for a long time. It's going to be a long time before that. About half the people I know that are operating this way like it. I personally don't, but about half of them like it, and they want to stay home. So I'm actually thinking commercial real estate's just going to go. But it's startups that pull us out of every one of these slumps, and they take us to a new world, a new way of operating, a new way of thinking. So I think I actually am pretty well situated. I did sell pretty much everything I've got in the public markets, and I've got a bunch of Bitcoin. So that's kind of where I'm going. It's more startups, more Bitcoin, more crypto. This decentralized world, I mean, I'll take it a little further than Bart did. I think it's opening up the globe. I think the whole earth is opening up. and the tribalism that we've had in the past is slowly disintegrating as a relevant force. And all this talk about regulation, well, all that stuff is these people who are still tribal trying to hang on to their power. And so then they're telling us to stay in place, wear a mask, turn around 3 times, wash your hands. I have the feeling we're about to go into a time where this world really opens up. And that will be fabulous for the global economy. I mean, when you have trade barriers, it's not good. But when you have the open world economy, everybody benefits. And we have an enormous breakthrough. So I think we're going to move from tribalism to globalism, and it's going to be led by the decentralized world. And that starts with Bitcoin.
Okay, thanks a lot, Tim. And Greg, are you stepping into this environment? Are you pausing? How are you thinking about it?
So I'm doubling down on all of our ecosystem companies. I'm basically following Tim's game plan, and I've let everybody know in our ecosystem that is contributing to this new, if you will, decentralized, more user-centric world that we're going for. This is one of the few times in my life when I feel like the planets are aligned. Sometimes things have to get bad enough for them to get better. Right. And COVID has been a great kick in the pants. And so I'm just basically following Tim's guidance: sell public, invest private selectively in the world that's going to contribute to this new decentralized reality. Because at a time when everybody's going tribal and anti-global, well, like the long-term bet is, hey, that's not going to work. And so, you know, unless you're going to go back to a Highlander model where a couple of guys with really big clubs beat the crap out of everyone else, you're going to come up with something that's decentralized, that's going to just work. And it was messy, just like at the time when like the World Wide Web came along. Who would have thought at that time that the World Wide Web was going to slay CompuServe, AOL, et cetera, whatnot. AOL at the time was like, with its merger with Time Warner, was the most valuable company in the world. Like, my gosh, what a different world, and what a messy, decentralized world the World Wide Web was compared to those. So it is a bit of a crapshoot to figure out who's going to be one of those winners in this new reality, but I'm all in that new reality.
Thanks, Greg. And I think that's music to Bill's ears that you're doubling down on all the ecosystem companies. And I'm going to give the last word to Bart. I know we haven't had enough time, but we've got to respect the next presenter. So Bart, you know, we just put money into Blockchain Capital Fund 5, which I know is open, but conversely, you also manage the Stephens family office. So, you know, the same question: what's your investment strategy in the middle of this crisis?
Well, I'd love to say something that goes against the grain with the rest of the panelists, but unfortunately I can't. I am not constructive on commercial real estate either. All the introverts I know love sheltering in place. All the extroverts, more like myself, are kind of struggling. That's maybe why Tim's struggling a little bit too. I think people are going to reevaluate what is worthy of their dollars and cents. Like if I was running a small private liberal arts institution, a college that was charging $70,000 a year for tuition, I'd be really scared right now, because it turns out the MOOCs at Harvard and Khan Academy actually are a really good ROI. I'm spending a lot of time on these sites with my children. In our personal investing, we're super long crypto, probably no surprise from one of the founders of Blockchain Capital. I think a lot of the companies that are helping build these bridges and roads, the infrastructure, the Coinbases and Ripples and Krakens of the world, are going to continue to see strong growth. And you know, I just checked that, you know, the price of Bitcoin is, you know, now up 28% year to date, is dramatically outperforming equity markets. So I've been also a seller of my publicly traded technology positions. Many of these stocks have come back to pre-COVID levels, which I think that is professional hedge fund managers following the same playbook as 2008, which is don't fight the Fed. They have an unlimited money printing machine, so go out and buy risky financial assets. Well, one thing that didn't exist last crisis was Bitcoin. The Federal Reserve cannot print more Bitcoin. So this is a perfect setup for Bitcoin, both the decentralization theme that has been talked about extensively on this panel, but also the Bitcoin is the hardest form of money. You want to be long things that the Federal Reserve can't print more of.
Great. So listen, I want to thank all 4 of you. I know on behalf of Bill and Adam, they're going to invite you each to have a full 30 minutes at the next one of these events.
Absolutely.
There's so much value from you. And thank you on behalf of everyone who listened in. And also apologies to AirMed that we're 5 minutes late, but I'm sure you'll get it on the back end.
Great. Good to see all of you.
Thank you. Nice to see everyone.
Thank you.
What a great panel. This was wonderful.
Thank you. Thank you all.
Good job,
Tim,
Bart.
Greg,
Good job,
Kelly,
Greg.
Bart.
Good job,
This
Kelly.
was just excellent. Really excellent. I'm sure everybody appreciates it. So thanks for attending.